what should we be paying attention to with weak yen, 3 standard deviation long renminbi, 3 standard deviation long Aussie, et cetera? What do we got to focus on?
We still have to focus on what the central banks are going to do, and especially what the BOJ is going to do over the next few weeks. They have a meeting coming up in a few weeks. And we think that they're going to potentially raise that cap on 10-year JGB yields. Yes.
You're willing to call that they're going to go from a 0.25 out to something new?
Yeah, probably about above 0.3, maybe 0.3 to 0.4, somewhere in that range. I think at some point there's going to be a loss or a lack of tolerance for a weaker yen. As you said, imports are going to start getting more expensive in Japan.
Right.
It's true that they need more inflation, but it seems that they also don't need the kind of uncertainty that's brought to the market by a lot of dollar-yen volatility.
Okay, but Thierry, with all your, I got to interrupt because this is so important. You and I are ensconced at the Imperial Hotel at the old Frank Lloyd Wright bar. You're having sake I can't afford. I'm having a triple scotch, and we're talking about a cultural change in Japan. Are we going to see that at this time?
No, I wouldn't describe it as such. To say it's a cultural change would be to say that somehow 0.25% is some sort of line in the sand that is immutable. We never thought that. It was always intended to adjust with conditions. Inflation is returning to Japan to some extent, but more importantly, the BOJ risks having a situation where it's forced to absorb and buy every JGB on the planet if yields outside of Japan continue to go up and people continue to dump their JGBs. I don't think the BOJ would want to be in a position where it completely loses control of its balance sheet. And the adjustment they have to make here is to raise the cap. It's not a cultural change. I think it's what central banks do all the time. Move with the times, move with the data.
Thierry, there was a time when actually people would not have found that as shocking, considering how much of some of the markets the Bank of Japan ended up owning. I do wonder, though, going back to your question about the idea of a weak currency being a bad thing, after so many years, when I'm sure that the Bank of Japan would have welcomed a weaker currency. We've seen this race to strengthening in the FX market. Are you saying that the Bank of Japan will be in the same camp and that really it's a fight to preserve the worth in order to avoid that kind of bad inflationary input?
Yeah, I think so. I think the kind of inflation that the rest of the world is seeing is certainly going to be visited on Japan. After all, they are not a commodity economy. Their terms of trade are not improving here. There's no reason to believe outside of central bank policy that the yen would stabilize at these levels. And I think they recognize that and will be forced to make an adjustment. It may be small. It may not be enough to take dollar yen back down to 110 or 105, but I think it'll be enough to start stabilizing dollar yen. The other thing I would keep in mind is that dollar yen typically does not go up in those periods after the U.S. yield curve inverts. And we are very close to inversion now, the same way we were in 2007 and the same way we were in 2019. If you look back at both those episodes, dollar yen was not rising anymore. It may have been rising before, but it started to fall after the inversion. So that's another reason why we think that dollar yen may stabilize around these levels.